Good day, everyone. Hope you guys are doing well. Attempting to catch this particular setup right here where it is. It is a Monday morning. This is MNQ. And what I'm looking to is we have come into this 1 hour gap. I'll show you over here. After coming into this 1 hour gap, we have not yet left a 1 hour gap over there. Um, and then coupled to that, we've also gone below a daily low. My anticipation, though, is that we see a little bit more downside as this is a shallow sweep and we're likely to go a little bit deeper again. With that being said, I'm expecting price to come from here and make its way down to possibly here. Now, I don't need to trade all of that. That's just what I'm expecting. Okay. Then what I want to go ahead and do is I want to look at structure on the lower time frame inside of that particular area. And as you can see now, we've had this initial bounce and then price tried to go higher and then failed. Okay, we can then also look to the other time frames such as the 3 minute, and we can see the price also went in, tried to go higher and then dumped. Even if we go down to the 1 minute, we can see more of this type of price action, price turning, trying to go lower and then dumping. Also, we've got equal lows over here, right? So with that equal lows and waiting, I'm waiting on the 5 minutes just to give me more confirmation here. I am looking to likely trade down through these levels. Now I have some resistance over here on the 15 minute. Sorry, not on the 15 minute, on the 1 hour that might appear in 12 minutes from now, but we're already starting to react off of this. So I'm thinking we're going to likely push through that level. And if I take it back to the 5 minute chart, as you can see, we're putting in lower price action now. Truth be told, I have enough now through this level, this reaction level that did not put in higher price action, to go ahead and sell off right here. So I'm going to put on this case, I'm going to do 4 contracts this time because I'm going to have a bigger stop on this one. In actual fact, likely 3 contracts I can add to it again. And let's sell over here.
Order filled.
I'm going to put my stop over there. So on this particular is quite a big stop. I'm risking $777 and I'm looking at a target. Let me see. I don't want to go that far yet. I'm looking at a first target of the other side of this gap, which I think will get some movement under this low, and then an overall target likely of the entire low. But we will see. For now, I will put my actual overall target at the entire low. And I don't like to go overall low. I'll do it over there. And the reason I'll do that is I'm going to see how it reacts over here and take off contracts accordingly. So we're getting some pullback now. And we can check the 1 minute. This is normal. We could even likely go up, grab something, and then come down. I don't want to see it go higher than this level. I'll obviously be out at that point. But this is not equal highs I've seen on the other correlated pairs that it sweeps above that high quite strongly. So I am looking at that as divergence, and I'm looking at price going down from here. Now, I could have gone in with slightly lower contracts, but I'm looking to instead take off some as we go along. So that's why I'm going in with that amount right now. So again, I'm going to pause the video so that we're not sitting here for hours or however long this takes. And then in between, I'll come back and we'll look at the update from there. So let's go back to the 5 minutes, see how that's looking. And we're starting to get more downward pressure. And we really want to see price, especially break this 15-minute level, close with a body on a 5 minute through this level. And that will be a better sign. Okay. See you guys shortly. Okay, welcome back. We're still in the same trade at the moment. The reason I'm bringing you back at the moment, I just read some of this particular futures broker's rules, and it states that no one trade can be much bigger than all the other trades that I've taken before. And since I am attempting to go all the way over there with this particular trade, or even through here, one or two things I could do now is I could close it sooner so that I don't violate the actual consistency rule, or I could take off a contract and hold it for a little longer, or I could go to break even and also close it sooner as well. So what I'm going to do over here is I'm going to take off a contract just to be safer, so that if I get any form of spike, that I don't actually violate the actual rules. So since I'm in a short, I need to go ahead and buy back one contract, right? So you're seeing the actual live management as well. I don't want to make the stream too long by actually reading through the consistency rules. I just did that now, but you can go ahead and look at it on your own time. It states that if this trade is bigger than all my other trades by more than 40%, of which this would be just over 40%, that would violate this trade would not be counted in that case. So I need to have less of a position on towards that actual target. So since I'm in a sell, I'm going to buy back at market one of the contracts as well. Okay, that will change my average, but will also put me on the safe side of things. So you're seeing it live now, the management of this particular trade. So I've selected one and I'm buying back
Order filled.
that one order. So now you can see my actual profit over here is less running, and my actual stop out level is less, was 777. Now it's 516, and my target is less as well. So that puts me within the safe range. I don't have to go all that way, but if we should get a spike or some kind of a news event happen, and price had to just shoot down and go there, I would have not had any profit on this particular trade. It would have violated the rules as well. So for that reason, I have reduced that contract size. Okay, I'll see you back a little later. We'll see how this goes. From a higher time frame so far, let's look what we got. Let's go up to the 1 hour actually. From the 1 hour, we can see that we pulled quite strongly back into this range. We've also um, close below the open of that, or the high of the previous candle. We seemingly putting in a lower price action in over at this level. Now this is a resistance point because it's now become a 1 hour gap, but we are coming from that 1 hour gap as well on top, and I believe that we're likely to put in some another low at the bottom. Right, we have not yet produced a 4 hour. Now where I would get out of this trade is, let's say, in the next 48 minutes we close like this, there's a very real possibility we're going to go up to go take out the to go into the 4 hour gap. So in 48 minutes, I'd like to see us displace down to actually get a better move from there. Now I'm waiting to go to break even. I'm waiting for another structure break to be able to go to break even. I'd like to see us trade back into this level or any level on this side of the leg, and then go down one more time, breaking something on this side of the leg, and then I'll go to break even. Now I am a little pressed for time though, so I might have to come back to this recording where we either hit target or we stop out or we break even, because I have to take my son to the doctor's office today. So I need to go and check whether there's an appointment available for him. So we'll see how far we get in the next, let's say, 20 minutes or so. And I'll update you guys on what I'm going to do from that point onwards. Unfortunately, I can't take these devices with me to go and continue the recording if I go to the doctor's office. But I'm sure you guys understand. Thank you, everybody. Okay, I'm back real quick. I have made an adjustment to the actual risk of the trade. I don't believe in moving stop losses aimlessly, but I'm going to explain to you why I moved the stop loss. And it's more so visible on the 5 minute. However, I want to show you on this 15 minute over here that on the 15 minute, we have a gap. So let me draw that on for you. Where is this tool? Right, we have a gap on the 15 minute over here. So we really don't want to see price close above that 15-minute gap over there. And if it does go through that, that tells us that that high is insignificant and is going to get taken. So instead of putting price, the stop just above that gap, we put it above the candle that forms that gap as well, right? That's part of that overall gap. Now, I'm doing this because I have to manage it while leaving home. And so what we're seeing over here on the 5 minute is that we've put in a high that traded from a gap, right? In the next minute and a half, I'm assuming that that candle is going to close lower. And should it close lower, that would mean a new high originated from a gap, as well as this particular candle over here. Although you don't see an actual gap in this side, what you do see is a gap traded through and price tapping back into that. That's a reclaimed gap of sorts. So if we look at the 15 minute, as I said, then on the 15 minute, that gap sits over here. We really don't want to see price go beyond that point. So we could realistically move our stop to here. Now, if it doesn't make that much of a difference to you, you could keep your stop over there because we're only talking about $100, right? Difference in this particular regard. However, since this is more so a scalp kind of trade, I can reduce this stop to above that particular candle over there. Now, what's nice about the stop actually is two things. It's above that candle, but it's also above the 50% of this candle. In fact, I can take it up slightly more. That should be a safe stop. If we come there, we take it out and we still go down, then statistically speaking, I was not likely to get the correct trade on that in any case. So now the next roadblock that we're going to see here is this one over here, this 5 minute over here. If we can close strongly with some momentum through that, that's going to be positive news for further downside. Okay. But we want to see momentum through that. Now I'm going to have to leave soon to go to the doctor's office to see if I can get an appointment. So I might have to come back and show you the end result of this particular trade, as I can't manage it on the way and on the road, and neither can I do any recording. So what I'm going to do is I'm going to leave the trade open. I will log in on my phone and I will close the trade out if needs be at a specific point, and then I'll come back and I'll talk to how we managed this particular trade. Now, what we're seeing here at the moment is not ideal. We want to see price pierce through it, like shoot through it. Okay, so we'll come back a little later and I will talk you through what we did from this point onwards. Thank you. Okay, good day, guys. Back again. Still have to get the actual appointment for my son at the doctor's office, but I thought I'll update you guys at the moment. This is where we are at. We are $600 in profit and targeting 1,542. Now I am tempted to actually just take it off here because $600 is more than enough. I'm sure you can hear my son in the background. Apologies for that. $600 is more than enough at this point, and I know that I have to go and leave. But what I'm going to do instead for now, and just see if I can manage it before I have to actually leave for the appointment, is I'm going to go ahead and take it to break even, so there's no risk on this actual trade. So that is a break even trade with a little bit of buffer. $34 in profit. Let me check the higher time frame to see if my management is correct. We have traded into this long wick over here on the 15 minute. Let's see what else we have on the higher time frame. We've also traded into this particular gap, and now we are trading through it. It's 12 minutes left on that 1 hour candle, so we have to see what that's going to do. We traded from this 1 hour on top. The targeting is still to the low. We might not get all the way there because we're going to see, we have already seen, that's how long I've been away. We have already seen a 4 hour gap get created. In fact, what I'm going to go ahead and do here now, since we got that gap created, I'm going to go ahead and take off another contract because you can't go broke taking profits, right? And then we'll rather let the rest of it run because it's becoming less and less probable at the moment based on presenting a higher time frame gap. So let's go ahead and we are selling, so we need to buy back one contract at market, and then we'll be left with one contract as a runner.
Order filled.
Okay, so we've just banked so far for today. We've banked $400 overall, and we're going to leave a runner and see if that actually gets to take profit. If it doesn't, $400 is not bad for a scalp move. Now you can get multiple moves of this type of setup per day. Um, as you can see, there's my last two, 100 and 315. So that's $400. And the one before the other day was 755. So $400 banked. I'm about to leave soon. That should be good enough. A quick 400 scalp. That's more than enough. If we actually get all the way down to the bottom over there, that will be $400 plus an additional 777, which I think is excellent work for that amount of time. We're following it down. But now, as I said, we follow and we react to price action. And what has happened since is that we've now produced a higher time frame gap over there, making this a lower probability in that it could pull up to that particular level. We especially want to see this last 10 minutes. If we can get a nice push and a close below this candle low, then the probabilities towards this level becomes higher and higher. Okay, but we'll check back shortly and see how far we are in terms of what has happened. Thank you all. Okay, so as you guys can see, this is exactly why I have gotten out of that trade there, because what happened is the 4 hour produced the gap, and now price is trading back up there again, right? And now we might just sweep these highs over there and fall all the way back down again, or we might go and stop out completely. Because what happens is price trades up to a 50% of the loss range. So what's possible is between this high over here and that low over there, it might trade up to 50% of that, then start falling down again. But to avoid that uncertainty, we rather take our profits where we can, and then we hold the rest of the position. I'm okay with getting stopped out here, not making that extra 700. There's 400 bag, and that's good enough. You take what you can, right? You don't try and get everything. And we'll come back to it and see how it ends up at the end. Just a quick update. I've moved my stop to this particular high over here, and the reason I've done that is that we shouldn't see price hold two gaps. So we've seen one gap hold. Let me explain to you what we've seen. This gap over here held and price went up. This one, we don't want to see that hold, and it has now broken. It will especially be broken once this particular candle gets closed. Once that is closed, this high is protected. We should not be coming above that high. So I can lock in that. If we come above that high, we've likely changed direction completely. And so I'm able to lock in that particular high as protected by this gap. If we sweep that and we take ourselves out, that's okay. That means that's an extra more or less $100 on the actual trade. But this is active management on a lower time frame. This is where we want to be. Hopefully, we go through this level with some momentum. If we get through that level, we should see larger downside. But now, fully protected at this point, I should not likely need to move that stop again. But that's the last point. Now, there is a chance that we come just above that, swipe ourselves out, and then fall down completely. But that is statistically low. And so, if that was to happen and it happens today, then we know that in any case, we've managed this trade correctly. Okay. So, I'm going to be back again when we come back in a couple of minutes and see where we are at. And we're back. As you guys can see, we've seen some movement now. I'm going to also manage it again. I just want to show you guys how we manage it. I'm going to manage it again. Since we came from a gap over there, we tapped it, broke down, and now we are leaving a gap in this next 2 minutes or so. I can then bring down this to that high because that high should be protected. And if that high goes, then it means low probability conditions from that point onwards. So we want to see in this next 2 minutes, though, that that gap stays open. And you know what? I'm going to go ahead and move it in any case to that level because that would allow me to bank just over $600. And then this level over here, you know this as an SPR. So that should also be something that pushes price down. So if we see price break this level and break that gap, which is trading up towards now, then if it goes above, yeah, I wouldn't want to be in that trade in any case. So this is not, I want to stress that this is not you're moving it because you got a little bit of profit. No, you're moving it at specific levels. Now already this is not something I want to see. I don't like this gap being filled in now. I would have liked it left there and then come back up, but we do still have this SPR as protection. Now, why do we also move it at this point? Because on a lower time frame, right, such as a 1 minute, we've gone the full V shape. We've gone high, we've gone low, high, low. So it can retrace all the way up into 50% of this, or it can break this completely and then go in a different direction. So to avoid that, we manage our trade, especially when we're in profit, we manage it at logical places. So a logical place, since we got in on the hour zone over here and we've been trading down the 5 minute, a logical place would now be above this high that tapped into that gap. And then we thought it was going to produce a gap, but did not produce a gap. However, is coming into an SPR. We've got about 10 seconds left and the SPR will appear there. Let's check the 15 minute to see if there's any support there. Nothing as yet. Nothing as yet. So we need we need this to stay open, a gap to stay here, which I don't think is going to happen, but we need that to stay open in order to get that support. So worst case scenario today, walk away with just over $600. Best case scenario is we go down and take that and we'll be just over $1,000. But either way, I'm happy with this trade. That is good trading, good management. If I close it now, we'd walk away with $700, but that difference is not that big. I'm willing to actually risk it because I would be risking not getting the full thousand a year versus just banking an extra $300. So I don't think that's worth it at all, even though that would be more money. Let's see what happens from this point onwards. Thank you, everybody. See you guys when there is more information and an update. Welcome back. This is looking a lot better, as you can see. And we're going to manage it again. As you can see, what we do, we went in, right? We went into this level, into this SPR, and then produce multiple gaps down. So that means we can bring price then to our last high, which is over there. And that should be a protected high. Now, we are really close to our actual target. Now we have to think about it because the last high is that far. If we come up all the way up till there, that means I bank another $300, right? But I'm giving up essentially a lot more. So now I have to actually manage it a lot more tighter because I'm giving up. If I bank $300, I'm also giving up another $300. Early on, the ratio was a lot different. So we need to consider that. We need to skew it in our favor. So instead of going 300 over 300, I will bring it down to this high. Now, why that particular high? That allows me to bank $400 or possibly bank $700. That's a better ratio. But why that's a little bit safer is we've got this level here and that level there that might appear. So that might still protect us from hitting that level completely. Now, this long wick is a gap in itself, but it will protect us from hitting that level completely. Now, we might be on here watching it hit that 777, oh, sorry, $771 live. That would be in addition to the already banked $400. So we should be walking away with just over $1,000 on this trade, or price will come back up, hit us here, and we walk away with about $800. Either way, that's okay. And that's why you skew the actual risk management in your favor. We could stay above that high, but then I'm giving up too much. So since we have these two gaps and we have these shallow retrace levels, which is there, and the other one being over there, Those are two areas that should offer up resistance to push price lower. Now, why am I not going all the way over here? Because as I taught you guys many times before, when it gets close to actually going right at the low, it tends to bounce back deep to create more liquidity. And I don't want to sit through all that big bounce back. So the low before the low is where I like to take my actual profits. And if it was the other way around, as in a buy, it would be, let's say we were buying up, I would take my profits at this high before that high. That's these kind of like two highs there, but it's clustered together. So that's what I would do. So that's that. In fact, if I look at this overall range now, um, if I look at this overall range, where's my other tool? I'm used to doing these things on TradingView. This is not actually TradingView. You know what? We don't have to worry about that. We're almost there. I was going to say, if I look at my overall range between that high and that low, I could move it to 50% of that as well, since I don't want to go above that.
Order
But
filled.
there we go. That's the entire trade done as promised. And as you can see over here at the bottom, those are the trades that we've taken, right? We've closed out today. These are today's ones: 771, 315, and 100. So just over $1,000 for today, and that's it. We don't have to take any more trades today. We've done all that we needed to do today. Thank you, everybody. Hope you enjoyed that particular trade and management. And noticed we have never gone above any of the levels that we managed it on. Short term highs usually are protected on the way to a target. Okay, you guys be blessed. Tell me if you want to see more of this. Please like, comment, and subscribe. I've seen some of you like, I've seen some of you subscribe, but I haven't seen you comment. So let's up the comments as well, and then we will see more and more of this. Thank you, everybody.